Kia ora tātou. Good morning everyone and welcome to Ryman Healthcare's annual shareholders meeting. My name is David Kerr and I'm the chair of Ryman's board. First, I'd like to thank you all for your patience and flexibility. We've moved to a fully online annual meeting following the announcement made by the New Zealand government on Wednesday evening. When we began planning this event, we were in the middle of the COVID emergency and we were conscious that flexibility might be required to respond to any escalation in the government threat level. With this in mind, we'd planned a hybrid meeting, a combination of a physical and an online meeting, knowing that we may need to adapt. Given the identification of community cases in Auckland this week, and with the safety of our residents, our staff, and you, our shareholders, and the wider New Zealand community in mind, we took the decision to move to a fully online meeting. So welcome wherever you are as online participants through our virtual meeting platform, which has been provided by our share registrar Link Market Services. As with a normal annual meeting, you'll be able to ask questions and vote, and I would encourage you to do so. I'll provide you with further instructions as we go through the meeting, but if you encounter any issues, please refer to the virtual annual meeting online portal guide, or you can phone a helpline on 0800 200 220, 0800 200 220. You can send through your questions at any time through the online portal, but I encourage you to do so as early as possible, as that will allow us to answer the questions at the appropriate time of the meeting. Now, the agenda for the morning includes a review from me, then I'll hand over to our Chief Executive, Gordy McLeod, to give you an overview from his point of view. We'll then move to formal business, which includes the resolutions before the meeting. Voting on resolutions will be conducted by way of a poll. At this stage, I want to advise shareholders that the motion relating to directors' fees has been withdrawn. This decision was taken yesterday, consequent on the changes in COVID-19 alert levels here in New Zealand, which have clearly limited both the travel and the format of the annual meeting today. These alert level changes mean that the opportunity for discussion and debate is reduced, and the board's wish is that such an important matter is openly debated. Proxies received to date identify that the resolution would be passed, but the discussions that take place are regarded by the directors as important, hence the decision. Before we formally begin, I'd like to introduce you to my fellow board members. I'll start with our Victoria-based directors, who are all at home as part of the lockdown in Melbourne. First of all, there's Claire Higgins. Claire is a professional director and a consultant who also has extensive board experience in Australia and New Zealand. Prior to becoming a professional director, Claire worked in the senior management roles with BHP and One Steel. She is chair of the REI Superannuation Limited, and her background in the heavy industry has been invaluable for her role as chair of our Health and Safety Committee. You'll hear from Claire a little later. Paula Jeffs. Paula is our newest board recruit. She joined us last year. She's a Melbourne-based human resources executive with experience across healthcare, finance and government sectors, and deep expertise in workplace planning, organisational capability, and executive coaching. In the early stages of her working life, Paula actually spent several years as a carer in the aged and disability sector. Her insights into talent management and HR have been fantastic, and you'll also hear from her a little later. George Savides. George lives in Melbourne and he has 20 years experience in the Australian healthcare industry. Earlier this year, he was made a member of the Order of Australia for his considerable contributions to community, charitable groups and business. George served as the Managing Director of Medibank, Australia's largest health insurer, before moving into governance. He's Chairman of Next Science Limited and Deputy Chair of the Australian broadcaster SBS. George is a Fellow of the Australian Institute of Directors and he chairs our Clinical Governance Committee, and George has made a huge contribution since joining us 7 years ago. If we now switch to Canada, to our director, Jeff Cumming. Jeff was a director of Ryman when the company joined the NZX some 21 years ago, and he rejoined the board in 2019 following the retirement of Kevin Hickman. Jeff's been a long-time supporter and shareholder in the company. An economist by trade, he's had more than 30 years' experience as a chief executive, director and investor, and he's served on more than 25 corporate boards in a range of companies and industries. Now the New Zealand-based directors who are here with me in Christchurch, Joe Appleyard. Joe is a partner with Chapman Tripp and is a skilled advocate and litigator, specialising in commercial employment and resource management law. Her skills are sought after by the larger corporates nationally, And Joe's experience in relation to civil disputes is particularly wide and varied, acting on all manner of commercial issues. Joe's been a member of the NZ Markets Disciplinary Tribunal since 2011 and is a member of our Health and Safety, our Clinical Governance and Development and Construction Committees. Warren Bell. Warren is an experienced public and private company director and is the Deputy Chair of the Board. He's currently Chairman of Hallenstein Glasson, who operate both here in New Zealand as well as in Australia. He's also Chair of St George's Hospital, the largest private hospital in the South Island. He's a director of a number of private companies as well. Anthony Lees. Anthony joined our board in 2018. He's the Managing Director of Lees Construction, which he founded in 1995, and he's built that into a leading commercial construction contracting company. Anthony's a former chair of the New Zealand Registered Master Builders Association, and he chairs our Development and Construction Committee and has added significant construction expertise to the board. And then there's the team. Gordy McLeod, our Chief Executive, is here beside me, and so too is David Bennett, our Chief Financial Officer and Company Secretary. So, the Company Secretary has confirmed to me that the notice of meeting has been sent to shareholders and other persons entitled to receive it. We have received no apologies at this stage. The company's constitution prescribes a quorum of shareholders. Based on the information from the registrar, I can confirm that we have a quorum present because proxies have been appointed for the purposes of the meeting in respect of approximately 273 million shares, representing over 54% of the total number of shares. So I'd like to thank shareholders for their level of participation in today's meeting. My fellow directors and I intend to vote all the discretionary proxies we have received in favour of the resolutions as set out in the notice of meeting. Our annual report for the year ended 31 March, including the auditor's report, has been circulated to shareholders and is taken as read. So what a year we've had, and what a challenge the whole world faces in the months and years ahead. Before I get to the COVID challenge, I want to quickly just run through the last year's results. The 2020 financial year seems a long time back now, but the main points were these. The audited underlying profit was $242 million, up 6.6%, driven by strong demand at our new villages. The reported or IFRS profit was down 19% to $265 million, which is, of course, due to COVID-related property valuation changes. The full-year dividend was lifted to 24.2 cents per share, in line with the underlying profit, which resulted in a dividend of 12.7 cents per share. Operating cash flows rose 12% to $449.8 million, and the cash receipts were up 12% to $1.13 billion. Our full-year underlying profit growth came in below our medium-term target of 15%. This 15% annual growth in underlying profit has been our target for many years, as it means we double profits every 5 years. And you as shareholders should know that we continue to believe that this remains an achievable aim. At half year, we said we expected to end the year with an underlying profit in the range of 250 to 265 million, which gave a range of between 10 and 17% higher than the prior year. We believed at that time that this was entirely achievable, but as you know, COVID got in the way, effectively freezing our sales and construction activity and increasing our costs substantially. I'm pleased to say, though, that the board has reviewed the trading, which has been satisfactory in the first quarter, and earnings are expected to be significantly weighted towards the end of the second half, in line with the construction program and in light of the impact of COVID-19 in both territories during the first half. We need to appreciate that Victoria, which is a significant part of our growth opportunity. Construction has reduced by 75% at 3 sites, and sales have been affected by the lockdown. And it's difficult to predict the impact this will have at this early stage of the lockdown. Yesterday, we learned that new lockdown restrictions were required in New Zealand with a focus on Auckland. So we've restricted visits to all of our New Zealand village care centres, and tighter level 3 restrictions have been introduced in Auckland. It's too early to say what the impact of these will be. But COVID-19 is first and foremost a human tragedy which reaches across the globe. It's causing extraordinary disruption and distress to many countries and their citizens. It is a once-in-a-100-year challenge. It's highly infectious and difficult to detect, and it's extremely hard on older people. I've been a practicing physician for more than 40 years, and I have never seen anything like this. But it's fascinating how fast medicine is adapting, and each day means progress. The reality is that COVID-19 is here to stay, and we know much more about it with every passing day, and we know a lot more than we did 8 months ago. The latest restrictions are a setback, but not unexpected. In short, it's an enormous healthcare challenge, and we're doing everything we can to keep it at bay. And thanks to the extraordinary efforts of our 6,000 staff, we've been successful to date. I cannot thank them enough. Their care, their professionalism, their can-do attitude, positivity and shared dedication to the people they care for has been inspirational. They've been led by a superb team. So thanks to Gordy, to Shane, to David, Marianne, Nicole, Jeremy, Tom, for all your leadership of our people. I wanted also to give a special thank you to our teams in Victoria and New Zealand. We're conscious they're still in the thick of it. They need to know we value them highly and how happy we are that they're on our Ryman team. Our company is in reality a human organisation made up of people who deliver value for all the stakeholders. COVID-19 has stress-tested our clinical systems and in particular our infection control plans. They've been robust. We had to learn a whole lot of new things and work in a way we never have before. The sheer logistics of implementing a lockdown, of gathering the right equipment to keep our residents and staff safe, of adapting systems and communicating with everyone in the Ryman bubble have been enormous. As we all know, Victoria has suffered a massive setback in its fight against COVID. We put our villages into a second lockdown in Victoria in early July, and our team has done a fantastic job keeping everyone safe over there in very difficult circumstances over a number of weeks now. We hope the latest lockdowns in New Zealand will be short-lived, and we fully support, however, a cautious approach to try and eliminate the virus as quickly as possible. The graph here shows how COVID-19 cases have been steadily increasing in Victoria, and the red bar shows the time at which the Ryman team decided to institute a second full lockdown of the villages. It's clear we've acted early, but not precipitately. Currently, there are over 100 care facilities that are affected by COVID-19 in Melbourne. And in addition, there are in excess of 1,500 residents and carers who've contracted the virus in the city. One can just imagine the complexity of staffing the care facilities, with staff numbers severely depleted, consequent on either them being infected by the virus or having been contacts of people with the virus, and so are being stood down. Ryman executives saw this risk in advance and undertook additional recruitment, so we were better able to provide cover for our full rosters. And furthermore, the company has guaranteed the staff remuneration if they are off work for any reason, or if they have ceased working at another facility to meet our needs for our staff to be working at only our villages. We've also had a number of staff who faced possible exposure to COVID at home because of their living arrangements, who've moved into spare apartments at our villages to reduce the risk to residents. This next picture shows staff who are wearing masks and face shields. And I show this because we all need to be aware of how challenging it is to wear this sort of PPE for a whole shift. Yes, they're valuable in terms of protecting our staff and residents, but it's a big ask of our caregiving staff to wear this PPE, and we're grateful of the way in which they've risen to this additional challenge. We recently had a Victorian State Health Service-led pandemic preparedness audit undertaken at our Nellie Melba village, and the auditors were impressed at the initiatives we had in place. The latest lockdown will have an impact on construction and sales activity, but it's too early to say what the effect on this year's build volume will be. One of the targets that the company's had has been to have 5 villages open in Victoria by the end of December 2020. Although there's a risk of this being slightly delayed because of COVID-19. It's a big challenge now, and it'll depend on how quickly COVID is brought under control in the Victorian state. What COVID-19 has done is to reinforce the attraction of living in our villages, where residents enjoy security, companionship, and a strong sense of community. They regard our villages as safe havens where they find it reassuring to know there's the best of care on hand if they need it. What was really pleasing for us as a company was that our net promoter scores for independent residents and our staff rose to record levels during the COVID-19 era. We've tried our absolute best to look after everyone, and they've appreciated it. If you think about it, the three factors that deliver a raised net promoter score are care, which is really an ability to empathise, effort, which is how easy or how hard it is to do business with you, and resolution, how you do when things go wrong. And our staff have clearly excelled in all of these areas. Customer satisfaction and employee satisfaction are, of course, two sides of the same coin. The investment we've made in training and developing our staff and making them feel valued stood us in good stead. We treasured our people long before the pandemic, with constant efforts to train, reward and remunerate in the upper quartile. But in addition, the COVID lockdown saw additional remuneration, adequate supplies of PPE as needed, personal wellbeing packages, and high-quality communication. There's some research suggesting that increasing employee engagement will result in a 20% increase in productivity. But I reckon our team delivered much more than this, for which we are very grateful. The challenge we now have is guarding against fatigue, so we're working on our people taking leave where possible and have further enhanced our wellbeing programs. Always the challenge with bigger organisations is to retain both the stability that comes with being larger as well as the agility that a crisis demands. So decisions were taken early and without hesitation, and where it was felt that it would protect our staff and residents, it was implemented the same day. The board was entirely supportive of all the decisions and all the expenditure that was consequent on those decisions. In a nutshell, we did it if it was the right thing to do and if it was in tune with the North Star of the company, this being to ensure that everything was good enough for mum or dad. ESG is important to us as a board. The environment and governance get significant attention, so that now attention in these areas is almost a given. The S of ESG, of course, relates to social and the importance of social responsibility. This pandemic has brought the S to the fore, where attention to staff safety, staff remuneration, staff conditions, relationships within the community and between the village and the community are all critical. The attention that's been shown to the S in this company will go directly to our bottom line, in my opinion, as the support from our staff has been outstanding. I've read that companies will generally excel in one of three areas. The first possible area is operational excellence, as with FedEx or a bank, where the best price or ease to do business with matters. The second is product leadership, as with Apple, and the ability to innovate and deliver the best possible product. And the third possibility is customer intimacy, where there's a focus on developing deep, long-lasting customer relationship building examples. So examples of that particular realm are evident often with companies like Marriott's, but I'd like to think that Ryman Healthcare would be recognised for its excellence in this area also. Being the most trusted brand in New Zealand for the 6th time is evidence to support this. It's now my pleasure to hand over to Gordy to give his commentary.